Hi, this is Mark. This is Thursday the 25th of September and an almost perfect setup on the dollar Swissy on a daily. And remember, we are always looking for a minimum 5 technical reasons to support the theory to take a trade. And you can see that on a weekly we have bounced again for the 5th, 6th week in a row off this weekly trend line, which is significant. And then when we go down to the daily and we look at the 5 reasons. So probability, well, the probability is in my favor. The fundamental bias is the dollar we think is going to continue to go down. And then everything is all about support and resistance in all its forms. And so here we have major previous support and resistance going on. We have a trend line. So we have a diagonal trend line coming in here. We have the 55 EMA. We have the whole number. Whole numbers are important in recent years. We have Fibonacci in our favor as well. This is the 61.8 and I have put the stop above the 78.6. You've then got the risk reward. So the risk reward for this trade is I am risking 33 pips for a potential 160. So the risk reward on this is great as well as. So I have multiple reasons to suspect that price is probably going to react and reject here. Another one is the average range. Today this has done 30 pips and the average in the last 30 days is 54. So if we take this up here, coming up just below the whole number, just below everything else, I think that's 8, is it, reasons why this should work. Now there's no guarantee, this is Forex, but that is a high probability A-grade trade I would take every time. Now, one of the variations on this is I'm going to watch it. I'm tempted to put another order in just up here, and for that I would only need a 25 pip stop, but this price may spike and then reject, but that is what I'm looking at today. I hope that helps. Catch you later.